Investment advisory services offered by Pryor McCormick Investments, an Alabama-registered investment advisor. Securities offered through Stern AG Financial Services Incorporated. Member FINRA SIPC. Pryor McCormick Investments and Stern AG Financial Services Incorporated are not affiliated companies.
Man, hey, I like this new groove you got going here. Did Steve pick that out?
Yes, he did.
Steve Pryor joins us from Pryor McCormick. This is one of my favorite segments of the week, and I was glad you're still able to come in. I told AJ this morning, I said, is he going to slack off on us because it's the 4th?
No slacking off at all.
Steve's here, man. He's watching out for you. Steve's with Pryor McCormick, of course, financial planners, but he's here to teach us a little bit. It's like a classroom instruction on how not to retire broke. We hope you enjoyed it. It's every Wednesday at 5:30. Set your clock by it. And, you know, a lot of times on the radio, Steve, I feel like I'm kind of having to teach and explain. This is my night to sit back and listen to you. Tell me stuff and help us sort things out. So glad you could show up tonight.
Well, I appreciate it. I want to wish you and AJ and excuse me, everybody up here happy 4th. It is one of my absolute favorite holidays. I just absolutely love it. That song was from a 70s band called Tower of Power.
What's the name of that?
The name of that is Taxed to the Max.
Oh, I like that.
Which is perfect if you listen to the words. Tower of Power, Taxed to the Max. Perfect words for the 4th of July. You know, because everybody, you know, you can have disagreements about all sorts of rights and this, that, and the other, which we had legitimate agreements. But when it came down to taxing us, that controls everything.
Yeah.
It's just like it is now. In my opinion, we have de facto communism because the government doesn't own everything, but they control everything.
Yeah, they tell us what to do with everything.
Exactly.
And we just have to keep sweating and meeting the bill, right?
Yeah, they can take your property just because you don't have a business on it producing enough sales tax for the local economy.
Oh, yeah.
That's just crazy.
These are just upside down times, and, you know, folks are kind of in defense mode right now. We talk about this on Wednesdays and trying to strategize. And in doing so, we watch the news, and we're seeing I want to walk through tonight. We were talking about things that have happened. You call it halftime in the year. We're 6 months, over 6 months in. So what does that mean to you as a financial planner?
Well, we look at things obviously on a daily basis, but the financial world runs on quarters. And then, of course, we're looking at the first 2 quarters of this year, which turned out to be just dramatic. They're very good. The S&P 500, the Dow Jones Industrial Average, both up about 14%, which is good. Now, it hit a speed bump in May because after May, or during May 21st, about that time, things went bad and lost 1.5% really in 6 weeks. Other things got hit. Bonds, you know, really took a hit. Let's see, the federal government decided they may at some point stop doing this taper off this bond buying program. $85 billion a month. The government's taking borrowed money out of one pocket
and to explain
putting it back
that,
in the other.
They're just printing money and putting it into the system, and it's inflating some of the stocks, right?
Yeah, they have to print the money because they have to have the money to run the government. You know, 40 cents of every dollar we spend is borrowed. So there has to be somebody to buy the bonds, and if there aren't enough people to buy the bonds worldwide, then the price of bonds goes down like it does anything else that there are not enough buyers. And that means the yield, the cost of putting these bonds out there goes way up. The federal government has been basically getting a free ride for a long time because they have artificially kept the interest rates low. Let interest rates go up a little bit, and all of a sudden the cost of all this debt for individuals, for companies, and most particularly the government goes straight up.
All right, so they, in my estimation, they just mentioned the fact that they might have to ease up, and it just caused a chain reaction that we're still watching this week from last week. Is that going to continue? Do you think they'll have to back off that rhetoric because of the overreaction?
Well, they've already walked it back some. You know, especially the Dallas governor said that it ended up being, well, we don't really necessarily want to do this on that timetable. The economy has to be going better. Unemployment's got to go down to 7% before we can even start this. And so there's been a lot of walking back since Bernanke made that statement. But that'll make September very interesting. That's the next open meeting for the group, for the Fed. And so whatever they say in September is likely to have an effect. You know, I said something 3 years ago that has become more true than I ever wanted it to be. When the government started taking over a lot of things, regulation, taxes, and bailing out, especially bailing out. You know, if you're connected properly and if you're big enough, you can't fail in America. Just take money out of the taxpayer's pocket and pay you off. But I said that we have to, as investors, professionals, we have to pay more attention these days to Washington than we do to Wall Street.
Really?
We should be paying attention to whether companies have goods and services that people want, the prices of it, the profitability of the company, how the company treats people, how the company, what the future of each company is. That determines whether you buy the stock or not, or even the bond. But when Washington controls everything by edict, by regulations, by taxes, I mean, when you think about it, it's very difficult to have a business of any size now. Because for starters, everything, just case in point, it's still bothering me. We built a new building a couple of years ago, and among other things, part of the standard code was we had to have those goofy light bulbs, and we could
Little
not.
squirrely bulbs.
Yeah,
Oh.
and we could not have more than a 100-watt bulb in any office. So that's one bulb in the ceiling.
Wait a minute.
Of every office. Yep.
Is that a federal reg or a local reg?
Well, as I understand it, and which I'm not claiming I do, as I understand it, there are national suggested codes, and then if you, it's sort of like this Common Core thing. You know, the feds have come up with this is the way things ought to be, and it's up to local governments to adopt them or not.
I got you. So the locals have adopted the standard, and no 100-watt light bulbs in any.
Yeah, well, we had to have 100 watts. You could have 10-watt bulbs, but no more than 100 watts per room. And, of course, I'm not saying that we did that until the building was signed off on and then did something else. I would never say that.
I understand.
But
I understand.
It's either that or put lamps all over.
That's why everybody's going blind. I mean, trying to, and those, don't get me started on those light bulbs. But look, so we're in that environment, and what we're here doing is trying to give folks a little bit of an education on how to handle their money. Gold got killed. Where do you go right now? I mean, what are you doing? What are we doing?
Yeah. I mean, that has to be a real sign when you start seeing television shows and commercials telling you to put your money in a particular commodity, and that's what gold is a commodity.
Yeah.
And gold last quarter had the worst 3-month period it has had since the beginning of modern gold trading in 1974.
Why did they run away from gold?
Well, gold is always considered to be something that holds its value in bad times, and it does given decades. If you compare decades to decades, it's done fine. But there was a bubble built around it because of all the fear of inflation and high interest rates, and government is an easy target. You know, people who want to market can sell against the government all day and say, "Look what the big bad government's going to do to you. Your dollar is going to be worthless. There's going to be runaway inflation. You're going to be buying ham sandwiches with gold ingots."
Mm-hmm.
And so there was a whole little cottage industry that came up, and in the end, really not even a cottage industry. You can't sling a dead cat these days without hitting some gold company trying to tell you it's the thing to do.
Do you think the marketing alone drove that? I mean, there was fear plus the marketing, and so it created a climate where people were running to that.
Yeah, we had started seeing that a lot many years ago, and everybody was getting a little paranoid about it. One guy that we met in Georgia lived in his own little compound on the top of a wooded hill with a fence around his house, and it was hard for him to decide whether he had more ammunition or gold. I'm not
my
against,
kind of guy.
Yeah, I'm not against either one of those. But we explained to him, if that kind of scenario happens and you really need the gold to eat, what are you going to do? You literally can't take a chunk of gold and buy a ham sandwich. So I opted for more ammunition and less gold, and maybe a mule and some seed and some land.
Is stocks are emotional for people. As you pointed out, they're about to get their 401k updates. How do you overcome fear in your business with what to do with your money? Because these same people are doing like you and I are doing. They're reading the headlines. They see the threat of government, but you still need to be strategic because you don't want to go totally on the sidelines. You want to have something when you're done. You want it to grow somehow. How do you overcome that?
Oh, absolutely. That's a great question. What we do is try to remove emotion as much as possible from it. And I managed money for a long time myself, but more and more, and really accelerated in the last 6 or 8 years, we've used professional institutional money managers from around the country. That's the beauty of being independent. We can deal with anybody in the country that's reputable. So we match our clients' money to different managers. For instance, a dear friend of mine was in for a review meeting this afternoon, and she has gotten more aggressive over time, not less, and we put her with a money manager in Chicago who is like a poor man's hedge fund.
Yeah.
It doesn't take $25 million to get in it. And they've done very well. And so you have to remove your own thoughts away from it. especially with the 401k. You know, we've heard all the time, and from my experience, it's been true. People spend more time planning their annual vacation than they do dealing with their 401k retirement money.
In the meantime, it's just either sitting there drawing nothing, or they're not being strategic or being aggressive enough, and then you pay that price years from now.
Yeah, absolutely. You have to be involved. The stock market is the only really long-term viable avenue to get growth. But that's the engine, and it matters what gear you happen to be in. And if you just buy stuff and leave it, you know, the old buy and hold, it'll all come back. You know, back in 2008, the stock market lost 37.5% of its value, and half the advisors were hiding under their desk, and the other half were telling their clients, don't worry, it'll come back. Well, it's not back yet. So you cannot just sit statically. We use, for a large degree, tactical managers. And those are managers who, if they see something bad coming down the pike, they get the heck out of Dodge. They'll hedge in all sorts of ways. They'll get out of the market and go into cash. Case in point, October 10th, 2008, we had a manager, and he has claimed that this is as much luck as anything. He woke up on a Monday morning to decide there was nothing he wanted our clients to own. He didn't like anything. Took everybody to cash that Monday morning.
He just got up and did it.
Yep, that's what those managers do.
Yeah.
People we had with him for sure.
Yeah.
And that turns out that Monday was the start of the worst week in the history of the stock market, and our clients missed the drop because they weren't in the stock market.
And
they
then
had been. He moved them out.
And then did what with it?
Well, he stayed in cash for the rest of the year. One good client of mine up in Arborville called me up like 2 weeks after that big drop and was all concerned. I said, well, you've been in cash for 2 weeks. He said, fine. At the end of the year, we realized it had saved that one guy 24%, 24% of his life savings in 1 quarter just by not playing, just by not being in the market.
Going defensive rather than aggressive.
Going into cash, yeah.
You kind of have to do both as you move along.
Yeah, there's no such thing anymore of buying high-quality stuff and just hold it. Yeah, that may work if you're an institution, for instance, and you have a 50-year timeline.
Right.
But I don't know anybody right now saving for retirement who's thinking it doesn't matter what happens for the next 50 years. You know, we forget.
Time will be up.
2008 wasn't that long ago. A lot of people had to postpone their retirement because of what happened in the stock market.
Absolutely.
You just got to pay attention to this stuff.
I know folks doing that right now. They're in their 70s now. Probably they're still got a lot of time left on them, but would just soon take it to the beach, but can't do it yet.
Absolutely.
Because this economy just got them by the boo-boo. Look, it's 5:46. When we come back, I want to talk about what's next. We were things down the road in the second half of the year, kind of get your crystal ball out. And if we got time, we'll squeeze a call or two in. If you've got some general questions for Steve, 941-1011 is the local number. And then toll free, 866-551-9933. Back in a minute.
Leland Live on Superstation 101.
It's 10 minutes before 6, 5:50 on this day before Independence Day as we keep on rolling. Steve Pryor with financial planners Pryor McCormick in studio giving us expert advice. We chat about this stuff on Wednesdays and try to educate ourselves. We want you to be smart. We don't want you to retire broke. Everybody out there's got to be thinking about it. We've got an audience that's constantly looking at what you've got left and how to strategize. That's what Steve does. So I said, Steve, come in here and talk to us. And I asked him to look in his crystal ball, but you mind taking a couple of calls real quick before we do that?
Yeah, that might be easier.
Because nobody knows, but you kind of get a sense of the patterns of things. And I got a couple of questions for you. But first up, here's Phil in Gadsden. What's up, Phil?
Hey, Leland. I've been enjoying the conversation. I do have a question, though. Since my wife's, and I know a number of state employees, what would Steve's opinion be of the RSA and David Bronner and how he's managed the retirement and other funds for the retirement systems of state employees?
Hey, that's a real good question, Phil. I mean, RSA is a huge institution, high profile in the state. What's your general opinion of what they're doing? Thanks, Phil.
It would be difficult to do a better job than he has done because in addition to handling all the normal investments well, he created this whole golf trail thing. And that's an alternative investment. That's important because they tend to act as buffers against market volatility. He did a great job. There was, the bond deal here lately with Jefferson County. At one point, I was assuming they would ask him to handle it. And of course, that didn't work out. Wish it had, because I have great respect for that guy, and nobody deserves it more than the teachers. So he's done a great job, and it's a good lesson for all of us. Don't have all of your money in stocks and bonds and cash.
Now, those kind of funds had dipped all over the country, and I think we're kind of on average. We're not doing exceptionally well with our local teachers with the RSA fund, but we're not crashing like some other states. So high points for that, just keeping it in the middle of the road?
Yeah, there's a lot to that. I mean, the golf thing is a unqualified success story, but the value of those golf places, the golf courses, has gone down over the last few years for every golf course. Yeah. Nothing is going to be perfect forever. As a matter of fact, I remember there was something about one of the airline bonds that he bought for RSA and really took a bath in that. Nobody's going to be perfect.
And I need to get to Andy, but do you fear that there's a lot of unfunded mandate with that fund out there? And this is a kind of a political question, but the state's got to live up to its obligations to the RSA and all those people?
Yeah, I don't think we're in near bad a position as like Stockton, California, and some of those places out there, because I don't think the promises, as far as I know, have been exorbitant. I think the management should be able to handle that over time. I'm not really concerned.
I got you. Okay, Andy's in Pinson. He's up next. What's up, Andy?
Hey, guys. How's everybody doing?
Hey, man, doing well.
Hey, good. Hey, I've got an investment strategy, and tell me where I'm going wrong here. I've got, and you don't know my last name, I've got almost $750,000 in J.P. Morgan stock, and I've been selling the weekly covered calls, making a little money. And, it pays almost 3% yield. Where's my thinking going wrong here?
Well, I think selling covered calls is a great thing. I started doing that myself back in the...
Would you do it weekly or monthly or what?
Well, it depends on the premium. As you well know, as the expectations of the stock market, PE ratios change, the premiums that you get from those. Sorry, guys, this is a little inside baseball.
I'm about to say, I'm just a redneck from Randolph County. I'm not quite sure where we're going here, Steve.
But, Andy, the point is the premiums change, and I would not get locked into weekly or monthly. I would just compare them on a routine basis. But that's a really smart thing to do. One of our advisors, actually, that's all he does is run covered call and put programs.
Andy, good question. Anything else?
Well, I'm just selling them and letting them expire. Hopefully, expire. It's weekly. It's what I'm doing.
Yeah, there's a time value for that, and sometimes the monthlies are better. I'll just check it.
Yeah. Okay. Hey, thanks.
All right. Good call, Andy. Good question. Now, explain that to me. What does a covered call mean?
Covered call, in its simplest terms, is you own a stock that you want to own anyway.
Right.
XYZ stock, and you buy it at 40, and as long as you're willing to say, okay, I'll sell it sometime in the next 6 months, 9 months, whatever term you pick, I'm willing to sell that at a profit. Well, if you're willing to sell it at a profit, say at 45 or 50, then there are people out there who are willing to buy that option from you.
So you stick it out there and say, here's my buy price. If you want it, come get it.
Yeah, and they pay you for that right to have that option. It's exactly like a piece of land.
Right.
You got a piece of land, you think the interstate's coming through here.
Sure.
You buy it. You own the land, or let's say you're the speculator on the other side, the crazy side.
Yeah.
You think you can predict where the interstate's coming in. You go out and tell the farmer whose land it might be on, look, I'll give you $10,000 today, your money in your pocket. Just sell me this property at this X price for the next year.
Under certain conditions. Or
well,
just for a term.
When I decide.
Okay.
And if the interstate comes through, he's stuck. He's got to sell me at that price. If the interstate doesn't go through, then you lose your $10,000 and the farmer keeps it.
But in the case of a stock, they buy it from you for a period and you get it back at what price?
Well, in our example, say it's a $40, you can sell a 45 call. If the stock goes up above 45 in this time period, then they will call it from you and you will sell your $40 stock at 45.
Yeah, for the $5.
You still make the profit. That's why I say if you're willing to sell at a profit.
So you're locking in your $5. And if it goes above that, the other guy wins. And otherwise, you get your 5 either way.
It also builds in a little cushion because if it goes from 40 to 35, that thing's going to expire worthless. That $5 is yours, and you really don't have a loss.
Told you. See, you'll be smarter by listening to this every Wednesday. You'll kind of get some of the stuff they're talking about on the financial shows. Steve, we got when's the next big thing to watch? What's coming down the road in the next few months?
I hate to say it, but I would go back to the Fed. I would look for their next open market committee meeting in September and see what they're going to say there. Because sadly, they can say the wrong thing and throws the whole financial world in a dizzy, like it did in the last couple of months.
Yeah. So, any speculation? Or you think they'll dial it back a little bit if things haven't markedly improved, at least in the and indices that we get every single day, or do you think they'll? Do they have to just give us the poison pill or give us the medicine slowly, or what are we doing?
I'm way too smart to think I have that answer. I don't really know.
That's why I need to write that down. I need to use that a couple of times on the show. I'm too smart to think I know what you're talking about.
Yeah, absolutely. Just a little background for all of this. I mentioned it a couple of weeks ago, but if you go back to 1990 in the stock market and you own stock for the 6 months going from November through the end of May, then you would have made a cumulative return at that time of about 440%. Conversely, if you own stock since 1990 every year, but you only owned it from May through October, you would have made about 37%. A dramatic difference. Now, that's just seasonal, and it's part, just misfortune in September and October, but just use that as a backdrop. There's an old saying in the Wall Street crowd that says, sell in May and go away.
And stay away from the fall.
Yeah.
Crazy. Tell the folks how they can reach you. I mean, you guys are the experts, and folks are out there driving around. They got more specific questions about their personal situation that we probably can't get into on the radio. How do they reach you to talk about that stuff?
To call, it's 1-800-800-8761. 1-800-800-8761. And, of course, you can always go on PryorMcCormick.com. And there's also, if you worry about that 401k statement you get next week, you can go on 401ksanity.com. 401ksanity.com. And we have a solution for people in their 401ks there.
Yeah, and you give away a lot of good free advice on your website. So I suggest folks try that, give you a call. I know it's a holiday coming up, and some folks are on the road now, but keep that in mind. It's Pryor McCormick. We want you to get to know him. You'll get to know Steve. He's going to be joining us on these Wednesdays to help us understand it. And so be thinking about that. Make it Appointment Radio and call us with your questions. Steve, thanks for the chat.
Appreciate it.
Back here in just a minute. Stay tuned.